GMM Pfaudler has given impressive returns. So, what's ahead? Well, the share market is a good way to make money in the long term. In the long term, many companies have given impressive returns. GMM Pfaudler is one such company. It has given around 686% return in the last 5 years. In the last 1 year, this share has given a 26% return. But is there a buying opportunity in this share now? And what do brokerages say about it? Let's look into it.
First of all, let's understand the business of a company. How strong is the company's business and what are its plans? The company is a global leader in corrosion-resistant technologies, systems and services. Besides making equipment for chemical companies, the company also establishes labs and plants. They produce glass-lined equipment for chemical, pharma, food and beverages and energy segment companies. Glass lines equipment is a corrosion-resistant element that is used in various kinds of medicines, polymers, chemicals, etc.
In branded product lines, it has Pfaudler, Normag, Mavag, Mixian, Interseal, Equiloy and Edlon. It has more than 1,800 employees across the world and around 15 manufacturing units. Technologies comprise 58% share in company's business. System has 15% share while services have 27% share. If we look region-wise, then 29% of earnings come from India and the rest 71% from the rest of the world. GMM Pfaudler is a market leader with a 40% share in the glass line segment. Now, let's look at brokers' opinion on these shares. JM Financial has maintained a buy rating for this share and increased its target price from 1,900 rupees to 2,300 rupees.
Now you might be thinking why brokers are so bullish regarding this share. So the first thing is that with a 40% global market share, this company is a market leader in the glass line segment, with plans to expand in high growth markets like India and China. While also focusing on new market segments like Southeast Asia, the company is looking to increase its market share. The company's order book is improving on the back of the international segment. Besides this, the US, EU are focusing on domestic production to reduce import dependence.
Besides this, as per Management Vision 2025 of the company, it has given a 45% earnings growth target for the next 3 years. The company is looking to achieve this target growth because it is focusing on high growth areas like India and China. Due to this, it is looking to have 13% CAGR revenue growth for FY 22-25. The company has targeted buying raw materials from India and Brazil along with the goal of improving margins by expanding capacity with new plants. The company is focusing acquisition, cross-selling in group companies and diversification. In the last 5 years, the company has completed 7 acquisitions. Now, let us look at the financial performance of the company. So despite big acquisitions in the last 5 years, buying 100% stake in the global business of Pfaudler, the cash flows have improved. The management expects margin improvement in the next 2 quarters. Higher margins may translate into higher profit.
Expenditure on pharma and chemical will lead to improvement in domestic demand. Management expects domestic demand to remain strong. Investment is going on in the chemical sector, and with higher investment in the pharma sector, earnings growth may remain strong. Right now, the chemical sector accounts for 61% share in the company's earnings and the pharma sector has a 32% share. But management expects that share of the pharma sector can increase from 32% to 40 to 45%. Now, after opportunities, it's time to look at the challenges for the company.
One challenge is that 93% of the company's earnings come from 2 sectors that are chemical and pharma. Besides this, management expects pressure on margins even in the second quarter. In the short term, margins of international businesses may not improve due to higher power and fuel input cost.
Now, considering all of this, should you invest in the company shares or not? So, on the back of a strong order book, market leader position and investment in chemical, pharma may lead to growth opportunities in GMM Pfaudler. From a long-term point of view, you can buy its shares in every fall, but consult your financial advisor before making any final decision.